Good morning, UPBOptionMillionaires.com. The opening bell is coming on this May 2nd, 2018. There's about a minute before the opening bell. If you hear a bell ringing, that will be the opening bell. I'm going to finish this video pretty quick, but I just wanted to bring up where my perspective of the market here. As you can see, S&P 500 futures are falling from their overnight highs, but still right about at where we closed on yesterday's session. You can see Apple helping to keep a bit under futures after hours yesterday. Apple is up. Something to watch for today again. The Amazon, Intel, Microsoft, Google, all the fades that we've seen for earnings for some of the bigger names. Something to watch today. Is Apple going to hold its gains? That will bode well for this market. The sell-offs that we've seen from the highs on these strong earnings reports is the exact opposite of what we saw back in 2009. Remember in 2009, earnings weren't so good, but stocks were rallying anyway. We had bad earnings reports getting bought. We had good earnings reports getting bought. I remember American Express moving from $20 to $26 on its earnings report. And now if we're seeing the opposite, strong earnings report followed by selling, possibly telling us that the market is top. There's the opening bell, so I'm going to be quick with this morning market video. But what I'm looking here for the market is the price action is after a really sharp move that we saw to start the year to the downside, consolidating, especially over the last couple weeks. The VIX is showing that market participants are not expecting as wide a moves that we've seen back at the start of 2018 as price actions kind of simmered down a little bit. If we could break under that 15 level for the VIX, that would be something that the bulls could really rest their hat on. I was looking actually off the lows, and to just bring up the studies here, you can see the momentum change. Really like to see a momentum shift before I get long or short this market. Right now we're in no man's land, and if you look from a chart perspective, we got the support trend line support back from 2017. And we also have trendline support from the record highs that we saw earlier this year. We break either direction, that's going to be a signal to get long or short the market, or puts or calls. Until that happens, it's tough getting the broader market moves longer term. We're getting this intraday chop. But if you look, what I saw off the lows in April was a possible move to 170. And look what the market did. We started pulling back before then. We get to that 170 level. Then I was looking at a possible head and shoulders long-term topping pattern for the NASDAQ, which would also imply weakness for the overall market. But until we get a break either direction, if you look, the S&P 500 ETF, the spiders, as the market opens here, we're down 0.05%. Again, in no man's land here. We either break in either direction. I hate to be ambiguous there, but until something happens, it's tough getting long or short this market. Also, small caps held that 150 support I was talking about, and this trend line goes back to the election move. We moved post-election all the way up. The trend line starts here, and we come across, and that's where we found support. Former resistance back in the summer of 2017. You can see we're kind of consolidating here. Are we going to break to the upside 160 on IWM? We're going to break below and get back in this channel. Some stocks to look at. Caterpillar. What a huge move off the lows yesterday. Guess what? Hit long-term support here. Topped out its earnings. Another fade. Remember the fades we're talking about? Look at this earnings fade we saw for Caterpillar. Hit support yesterday, rallied $4 off the lows just about. Caterpillar might be a trade, or its sister or brother, whatever you want to call it. John Deere was coming near support here, and you can see it's down a little bit. Also a name to look for. Momentum has not turned yet, though, for John Deere. And look at Apple here this morning. If you look, this trend line has bounced above it. Now, this is a long-term chart I have for Apple that I've put together, and it's worked great in the past. You can see 2007 to 2009, we had to pull back into the financial crisis. Remember, Apple, $80 split adjusted. That was before its 7-for-1 split. And then if you look back in 2012, remember, this was the top for Apple. And then we bottom in May. And then you go back to 2015, we pull back into the start of 2016. And you look, that's where the market rallied. That's where Apple started its rally. And look, we broke above. Something to look for, though, with Apple as it's up 3% this morning. Buying back over 10% of its outstanding shares. $100 billion of its own stock. Oh my gosh, Apple looks in the mirror every day and loves itself so much that it's going to spend $100 billion on itself just in its latest round of share buybacks and raising its dividend. Look at Tesla back over support. You see Tesla came down to support. This support line back over it, was putting in a beautiful bull flag, kind of faked us out last week. Dipped back down under support, above it again. Tesla, watch for very negative. You see, what was it, Bloomberg this weekend? Had Elon Musk standing on a pile of cash with blowtorches or something. So you come up with all the negativity you want, but bottom line, Tesla's over support. Possible move to the upside. Facebook, look at Facebook. It's a the news out the last couple of weeks with its privacy helped bring it down to support. That was great. We haven't seen support for Facebook since the start of 2017. Look at the support line. And this is a support line I've had up. You go to StockTwits for many, many years. And look at it. Came right down to support. Started a rally. Now this other trend line support line's keeping a bit under it. Look for Facebook. Possibly 200 plus. That would be good for the market. Let's see. A couple more charts. Let's do Amazon. Despite what you see with the price action, Amazon looks good here. Possible cup and handle formation. New all-time record high probably coming into summer. So if you had to take my opinion where the market's headed over the short to medium term, I have no idea. Longer term, I think it's heading higher. And I think we're going to break out of this wedge to the upside on QQQ, IWM, S&P 500. I do think, however, higher interest rates, as much as everyone says, oh, it's great, the market's always rallied with higher interest rates, but we've never had this much debt based upon cheap money, low interest rates ever. If you look at corporate debt levels, never been higher. So as the interest rates start to rise and these massive debt, the massive debt bubble that's been fueled with all of this cheap money, eventually the cost to service all this debt's going to rise, and consequently that's going to make some of these corporations go belly up. But of course, if interest rates kind of hang around here, go just modestly, very slowly higher, we could see this rally continue for many, many months and into next year. UPBOptionmillionaires.com. We'll see you in the chat room. Have a great day, guys.